doing in this market. Ajay, hi, morning.
Good morning, Isha.
We're still waiting for the news flow to turn completely out of the woods, but at least the prices have. What is it that you've been buying in this market?
Well, life can't be complaining because you see what's happened to the global markets. US historic high, Japan historic high, Taiwan has gone up. So I think when we focus on Indian investors, we just focus Indian market. And I think that is going to be the theme of this year, the transformation of Indian equity holder to say there is a world beyond India. We are only 5% of global. So I think that move that we have done last year, 2 years back, and into last year, currently same, to diversify into global markets, I think has paid dividends, good dividends at this point of time. So I think when we focus on equity, there's nothing to complain in the middle of the war. If your market indices are at historic highs, then what do you have to complain about?
Ajay, I just wanted to ask you on the banking space, especially the big boys, HDFC and ICICI Bank. How do you look at these two stocks, and especially ahead of the earnings?
Great value if you ask me personally, because they have everything that's been offered on Indian financial services space. They haven't performed for such a long time. The only, and therefore, technically everything is good about them. In terms of pure value, they're wonderful stocks. But as I always said, there's a reason for non-performance. And I think the reason for non-performance is bureaucracy inside, lack of maybe enthusiasm to do things as they stick. They get stock options, so they get compensated. It doesn't matter where the bank goes. So the problem in India is that the management compensation plan, if you look at these two banks, is not linked to the share price. So investors lost money. If you look at HDFC Bank, investors lost money, but everybody's very rich there. All the executives are super rich. Now, when that happens, inevitably what happened is look at the bank performance. In 5 years, investors haven't made money in that thing. So I think they're great institutions, great banks, but I think they need to get aligned. The compensation plan needs to get aligned with the share price for an investor to make money. That's the problem there, that it doesn't matter to the executives. Bank share price has gone down so drastically, HDFC Bank. Does it affect any executive or board member? No, it doesn't affect them. So, so therefore, as investors, we would like to invest in companies where the interest of the management is aligned to our interest. Unfortunately, as good as they are, the misalignment is forcing us to stay on the sideline or very marginally. Great value, but I think the misalignment is hurting the investors more than anybody can imagine.
So great value. So what do you do in a situation like this, Ajay? Do you go out and buy some of these names? Do you stay away? How would you play it?
See, if you're playing the India story, you can't stay away, right?
Correct.
So that's the end of the answer. The answer is you don't go overboard with them. Okay, yeah, there's sure the value stocks, but at this point of time in the world, you got stocks available which are growth stocks. You got some phenomenal other new themes coming in. So you really don't want to just sit on an elephant. If you want to, at the end of the day, win the war, you got to be on a horse and a steed, not an elephant. Sometimes to be safe, be on an elephant, and which is what I said, small allocation. But anything getting large excited, I doubt it very much. There's so many more things to do better than these two stodgy stocks.
We've got two earnings which are out, TCS and Wipro. What's your view based on what the commentary is coming from these two companies for IT?
You know what? The view is the same, that these are a disaster for this country. I think it's shameful for a Wipro to announce a buyback in the environment that we are in. World over, technology companies are borrowing money to invest. This man can't find investment avenues. Now, this is a shame on India. I'm really disappointed that we have come to a situation where the guy needs to give a dividend to cover 88% of his cash flow because nothing else they can find. No wonder they are in miserable shape. No wonder they run the company for the promoters. It doesn't matter what your revenue guidance is, 0.2, 0.1. There is nothing strategic happening in these companies. They're useless, absolutely useless companies for investors. It's a good promoter. He takes 10,000 crore, does his own family office, investment. Where does it leave India as a country? We have been left behind by these guys kind of companies who have insisted on doing dividends and not reinvesting. It's a shame, absolutely, that what these companies are doing. And I think performance apart, the concept of these companies, take the cash, what we are earning, give it away to the promoters so they can run resorts, they can run all kind of stuff and not invest in the companies. Can you believe it? Google is borrowing money, Meta is borrowing money to invest, but these guys are giving away money to shareholders and saying, promoter, please enjoy your lifestyle. is ridiculous, absolutely ridiculous.
So Ajay, then how do you play technology? Because there has to be some way to play.
Don't play India. Don't play India. India is useless.
Oh.
Absolutely agree. India is absolutely till they don't change.
So
We should not play India.
Even the likes
so many
of,
themes in the world.
Sure. Even the likes of ER&D, even the likes of SaaS companies, pure SaaS companies, you wouldn't go for any of those at all?
None of them have scale. None of them have scale. And again, I keep saying that the options available to an investor are so many. So why would I want to go to a subscale technology venture if I could have invested in a TSMCs, or if I can invest in a Micron Technology, or if I can invest in other such companies, SanDisk, for instance, with microtechnology. At the end of the day, and if I really want to put money, I'll put money in Microsoft with a P of in 20s, low 20s, if I'm not wrong. And it's a good, solid company with good cash flows. So the question is, we neither have the scale, neither the guts to invest. So might as well take my investors' money and put it elsewhere.
Ajay, you've always been a fan of niche consumption. Anywhere you've deployed or added to positions afresh in the last month and a half?
Nothing, absolutely. I think the only place we added up significantly has been power as a segment. And I think that's the one segment we have kind of more than doubled up. That's the only thing. Apart from that, in Indian context, I don't think we've added anything anywhere except power companies.
Ajay, in the consumption space, we have forgotten the big boy ITC, and no one is talking about that company. How do you see ITC?
You're right. The level of irrelevance of a frontline stock is just astounding. And that tells you the story. When promoters run and managers run companies for themselves, this is what happened. If it was a pure tobacco company, we could have made tons and tons of money on it. And then they had the fancy diversification. I want to make hotels. I want to sell spices. I want to do this thing. Doesn't work for investors. If I need to buy a spice company, I'll go buy something else. I don't need to buy ITC. So, I keep saying same thing, that the Indian model of compensating managers, irrespective of company performance, has resulted in what ITC is. It's a beautiful stock. Everybody has in the portfolio. It was standout. Look, you're right, where it has gone. I don't think it's a great buy. Again, I say the same thing. Because the philosophy of management is that we will keep doing our hobbies, and we'll buying a spice company, and we'll buy this, and we'll buy a small brand here and a small brand there. Where does it take the investor? That they need to answer. Where does it take the investor? Once that answer is there, you should go buy the stock.
Nor has Reliance done a whole lot, Ajay, and for quite some time, not just in the war, while it may have lifted off from the lows of, those 1,200, 1,300 thereabouts, but not gone anywhere beyond that.
Well, nothing to say that if the promoter's mind is somewhere else, the company's mind goes somewhere else at the end of the day. So I think it's very simple. Again and again, I keep saying that why we have said to 2 years back, diversification, one third, was precisely this, that our Indian investing public has ensured that Indian promoters, Indian entrepreneurs are living in a little cocoon that's saying, this capital is always available. These guys are not going to go anywhere, so I can do what I want. That's the bottom line theme of Indian today businessmen is. And I think that needs to be shattered by people saying, and this will happen. I can tell you, a large chunk of money is going to move from here to the overseas investment as people are realizing what's happening. Problem is that there is a bar on the levels of investment you can make. Is you can do LRS only, perhaps and it's complex. Indian mutual fund have limits. Take out the limits, and you'll see 1/3 of Indian mutual fund corpus will move to foreign equities and foreign mutual fund. So, can't blame Reliance as one guy because their interests are elsewhere. Everything else is good about them except the company, I guess. But that's not important to them. Shareholders are never important in this country. Minority shareholders, least of all.
Ajay, so you don't play IT at this point. You deploy very little in banks. Where is it that you're deploying there for? What's looking attractive? What's looking like no-brainer?
No, I don't think we said banks in general. You talked of two banks.
Sure,
I think there are couple of banks where PEs have stepped in, and I think it's a great place to be with the PEs because they will change things around. And that is where I said, when the PEs step in, the alignment of PE with your shareholder returns becomes completely merged, and that's a good place to be. There can be mishaps, like what we saw in one of our biotech companies. It has misfired, or a consumer company, but by and large, PE investment syncs with your return ability investment. If you can come in along with the PE guy at the same price, greatest place to be. You can go wrong sometime, but you'll be in the safe place. So we bought banks. We continue with the gold loan companies. I think they're great companies. Again, one company has got a huge investment from a foreign PE fund equivalent. So I think that segment of the market, I think is safe, secure, sound for us. We have been investing there. Banks, we have invested in a couple of banks which are backed by now PE investors. I think that's where the space is. And there are a couple of smaller banks which are good. They're very, very strong, including a PSU bank we invested in. Very, very strong, neat, clean bank, good rate of return, return on equity. So it's not all bad, but it has to be selective. Their returns are not astronomically great at this point of time. Therefore, you have to be very careful where you allocate that. But why would you put money in a bank versus allocate and put money in an engineering company, or put money in an auto ancillary company, or put money in the theme called capital market? So it's a game of allocation, and unfortunately, you need to make choices. I don't have unlimited money. Some people do have, but then we make choices.
Ajay, will you allocate money to defense at this current levels?
We have defense. Okay, so historically, we are invested. So if you ask me, will put additional capital? Answer is no, because most of the stock are PSU. There's no dearth of order book. If you look at, HAL, or look at Bell, or look at anyway, Bell has done well, of course, but look at BDL, all right? They have no dearth of order book. But if it doesn't produce the planes, what do you do with an HAL guy? He's got order books for 20 years or maybe 50 years, but the guy doesn't make planes. So yes, we are invested. Yes, we think they're good companies, but PSU at the end of the day can give you only PSU returns. So let's be honest about it. Let's be realistic about it. That I keep quoting it to a lot of my investors, that would you buy a car from a PSU company? Least of all, buy a plane. So I think that tells the story of how much you should allocate to these companies. Again, beautiful themes abroad. Why don't you invest abroad? Defense themes, global themes versus India theme. India theme is PSU basically. So you want to live with PSU returns.
Have the same view for PSU banks as well?
PSU banks, very interesting. Actually, it's quite an interesting conundrum, because I've never seen a stock so cheaper than any of the PSU banks. And they are so cheap at the end of the day. Wonder why they're cheap? I do not know the answer. We look at price to book, look at PE multiple, low single digits multiples. I have not fathomed, barring the PSU tag, that why these banks fare so poorly in terms of valuation. I guess the answer, perhaps one day when they get privatized, you'll get a multiple of 10. But till that time, I have not been able to, I'll be honest to your viewers, that I can't solve the conundrum of why some of these good banks, and they're good banks, I'm not saying the bad banks, run with such low valuation multiples. I have no clue as to what's happening there. And they have been consistently a low multiple. It's not an event of war. So somebody can solve the mystery for me. Perhaps I'll invest some of the money there. But till that time, let's see what traction happens. They give good returns in periods. If you see last 1 year, they've given very good returns to investors. But longer term, will the P of 5 or 7 or 10 go to 20? I do not know the answer.
Yep. That gets sometimes tough to call. But Ajay, so great to have you on the show. And
thank you very much. You have a wonderful weekend.
You're always candid, and that's what we like about you.
Thank you very much.